Hey traders, Ivan here, market commentator at the Global Prime Forex. Today I want to touch on a concept that I believe is going to be very interesting for those that are going to be applying this technique on a regular basis, especially when the market goes through a period that you might be suspecting it's an accumulation. Now, remember that an accumulation essentially means that the whales, the big boys, the big dogs are looking to incorporate more bits, looking to gain further exposure into a specific market. Now today what we're going to be talking about is obviously Bitcoin. Bitcoin has been on this protracted bullish trend, and I want to revisit a tweet by Jan and Jan. They are the founders of Glassnode. Glassnode is, for me personally, hands down the best data analytics when it comes to Bitcoin and cryptos. And this is what they stated in the past 24 hours. Strong Bitcoin support around the 55,000 area confirmed by both on-chain transaction volume and also through trading volume on the aggregation of different exchanges. All right, and you can see right here through this volume profile, they've actually marked through a red dash line this area of 55,000. In this tweet, Jan and Jan conclude that definitely still there is a real possibility. They're still expecting that at least one more leg up, and that is also my conviction. I believe that Bitcoin might actually go into the 70 to 73,000 next resistance. To me, that coincides with a 100% projection target. So as you come to this chart and we were to actually go through the weekly structure and we draw a 100% projection target, you would notice that the next area that coincides with that 100% projection target, essentially what we are doing here is a symmetrical target. So we can actually grab that bracketed area and expand that towards the upside, and it would give us about 73,000 as the next target for this bullish cycle in Bitcoin. All right, so with that being said, and bearing in mind that this is 55,000, an area that has already proven to be a high area of interest for those that might want to continue accumulating in the market, we need to ask ourselves the following question: are there any techniques that we can deploy that would actually give us some type of insights into understanding whether or not this market is indeed going through a period of accumulation? And there is one particular technique that I have been using for many years that would blow your mind. It would give you incredible insights, and very few people talk about it. So essentially, whenever a market goes through a period of accumulation and the big whales are going to be involved, what these players essentially need is liquidity, so that they actually don't shoot themselves in the foot and they drag prices against their interest, in this case being long this market around this area of 55 to 55.5, which is, as I said, what I've been highlighting also Jan and Jan, and we have this area comprised through this imaginary rectangle that I'm drawing right here. Okay, so with that bearing in mind, we can see that 55,000, it is definitely acting as a bouncing area. Now here's the crux of the matter: if we want to start gathering evidence that this market is indeed going through a period of accumulation, these big whales, as I said, as a reminder, they need liquidity. So we can start looking at the fractals that have been created and whether or not every single time that a fractal is taken out, the market is either accepting below that previous fractal or it is rejecting immediately. So we can start identifying this pattern and it will blow your mind, as I said. And so far what I can see is about a 85 to 90% rate in terms of the evidence that there is accumulation going on. So let's go through each of these fractals and what's occurred once it got broken. So this is the first fractal after this big liquidation bar, and right here we can see that immediately that market was rejected. Therefore, that communicates that that was seen as an opportunity by the big whales to find liquidity and push the price in the opposite direction, which is, as I said, the desired and favored direction for this bullish cycle. Next, we're going to be looking at this fractal levels right here, and this is the only exception where even though we did break, we didn't actually reject immediately, but notice that this is nonetheless a V-type rejection. So that to me counts as a valid sign that this market was yet again showing us that accumulation footprint going on. Next one is this, these are all these local lows, and notice the pattern here: compression, fractal, rejection immediately, fractal, broken and rejection immediately, fractal, it gets taken out, and there is this vigorous bounce once again, and another fractal, and that gets to be taken out once again. Now this has been the last time that we've seen a fractal taken out right here, and once again it looks like we are going to be rejecting these prices. Therefore, further evidence and the preponderance of gathering all this data to me suggests that in terms of the first box that you want to tick, that is the rejection of fractals right away, quite immediately, it is occurring. Now the second stage that we want to also corroborate is whether or not whenever we see these breaks of fractals, we are going to have a spike in volume. If that is the case, that is definitely going to be reinforcing the notion that this accumulation is indeed taking place. If you think about it, an increase in volume essentially means that there is more commitment, more engagement, more interest, if you will, for these buyers to step up to the plate and finding that much needed liquidity to push prices in the opposite direction, which is what we've gone through as the first step of this technique. And so I've already marked these times when the fractals got taken out, and you will notice that almost without exception the spikes in volume that we've seen through this period of consolidation have coincided right here, right here, right here, right here, right here, and you would argue that this is the only one that appears to be a bit more of an average size volume. So the bottom line here is that there is indeed techniques through the study of the charts that can open up new venues of information for us to conclude that this market indeed appears to be going through an accumulation process. If you were to actually flip this whole concept upside down and ask yourself, whenever we've seen the breaks of fractals to the upside or resistances that have been created through the theory of fractal formations, what's been going on. So here we can see essentially that we had a fractal, it got broken, and there is no such thing as a impulsive rejection to the downside through this period. We can also start to see that through this fractal there was no impulsive rejections that would suggest there is more accumulation to be selling. There is more interest by those that are holding coins that are wanting out of the market at decent prices without having to endure slippage. All right, so there you have it. This is a concept that I believe can be very helpful for those that are looking at a specific techniques that can communicate whether or not this market is going through periods of accumulation or not. I do believe, knowing that we are at such a strategic level like the 55,000 in Bitcoin, also coincides with a psychological round number, and obviously the icing on the cake has to be this tweet by Jan and Jan from Glassnodes, and it does sustain these narrative that we might really see this 55,000 as an area where the market might be looking to accumulate. All right, so with that being said, I beg you'll do remember, if you enjoy this content, smash the like button, leave some comments, and you can actually come and talk to me on one-to-one through direct messages in our Discord room. Okay, so if you enjoy this content and you want to find out more about the type of material that I produce, I invite you to reach out to me. Cheers.